COVID-19 and what that means for insurers. I'm Amy Nesbitt, a Principal Associate in the litigation team here at Wakeman's, and I'm joined by a diverse panel, each bringing a slightly different perspective to this discussion. We've got our resident aviation specialist, Hayley Kiley, who's the former head of claims at the Monarch Travel Group. We've got Christy Devon, an experienced D&O and coverage lawyer. And last but not least, we've got Tim Grimes, a trainee solicitor currently undertaking a seat in the professional indemnity team. Just to let you know, the session's being recorded, so any questions will be answered anonymously. Let's kick us off then. The pandemic has forced us to adopt new ways of working. Are any of those changes here to stay? Christy?
Hi, Amy. Yes, before we look at the ways that we've changed our working, I think perhaps it's good to have a little bit of a closer look at some of the changes. Understandably, the pandemic has heightened our awareness and also our aversion to risk. This is both in relation to health risks and economic risks. It's going to be interesting to see how this plays out and what opportunities this presents to insurers. Drawing on my own personal perspective, I've been a lot more aware of the potential impact of the virus on my everyday activities, and I've been trying to mitigate the risk as best I can by, if I'm booking tickets for an event, making sure I purchase as much additional cover as I can to protect against cancellation, etc. And any big purchases that I've been making sure that I do so on my credit card, so that I've got a little bit of extra protection in event that the business either goes into administration or if it just fails to deliver. So then I can rely on my credit card company to assist in that regard if a claim needs to be pursued. And I think it's fair to say that people's buying habits have changed significantly. There's a lot more reliance on the internet and online shopping. Obviously, the big downside from that is this may well and truly mean the end of the high street. Since the pandemic, we've seen some well-known brands go into administration, Debenhams, Oasis, Laura Ashley, to name but a few. And it's not just the high street. The large shopping centre giant Into has recently gone into administration. So, but it's not all bleak. A YouGov survey has revealed that corner shops are doing remarkably well, and that 80% of adults in the UK are now relying on corner shops. So that small local businesses such as those are seeing seeing the benefits of what is happening. But I touched on the greater reliance on online purchases, and unremarkably, understandably, this is extended into insurance. Many insureds now want to make all purchases and deal with all their claims online, and it's led to a greater urgency in the digitalisation of the insurance market. Also, when it's come to buying insurance, many business insureds who are uncertain of what's happening with their businesses aren't quite so keen to make long-term investments. So rather than renewing their policy for another 12 months, they've looked instead to just extend their current policy by a few months and sort of almost take it month by month. Another change we've seen, car insurers, rather remarkably, they started offering customers refunds because fewer people driving meant fewer accidents. And it seemed that they'd set the premiums higher than they needed to be, so people getting refunds on their car insurance. But I do wonder if perhaps insurers are opening a bit of a can of worms here, because if motor insurers can refund because the premiums were higher than they needed to be, I wonder if consumers will be looking to other insurers to do the same. In particular, sort of medical and dental policies where people haven't been able to have sort of routine surgeries or routine dental appointments because of the lockdown. I wonder if these consumers will get savvy and be looking to those insurers for refunds too. And that's going to be at a time, when there's huge pressure on insurers in terms of the number of claims that arise in anyway, potentially in other parts of their business or other books. It seems that these changes are likely to stay in the medium to long term. One thing that I noted with interest is that in terms of buying habits, at the start of the pandemic, there was increased demand and inquiries about health insurance and life policies, but that peaked in March 2020. And since then, it's declined. And now the interest in these policies are back to pre-pandemic levels. So, which you would imagine people would be more concerned about their health and loss of life. But be interesting to see the theories behind it. It may be sort of the theories that people think that this isn't something that's going to happen to them, or it may just be that particularly life policies are very long-term policies, some of them sort of 30 years, and people may be feeling that's a huge financial commitment at a time when they themselves are facing uncertainty about their jobs.
I think that's all really fair, Christy. Tim, I'm going to come to you. What changes have we seen in professional services?
Thank you, Amy, and good afternoon, everyone. Professional services, as we all will know, have gone through a massive change, and that being working remotely and also working from home. That has been something that's been in the minds of a lot of businesses for a long time, agile working from home and creating more flexibility. And what the pandemic has done is really pushed businesses to adapt in such a quicker way than they would have originally envisioned. Are these changes here to stay? I would say by and large, yes, but there obviously is a scope moving forward in terms of business adaptability. We are seeing such a huge change culturally in the way that we work, and that will lead us from where we are now into the future. We see how we are now building new relationships and doing what we're doing now, having these new ways of communicating online and new ways of interaction, and businesses are finding a path forward in that. So yes, I think these changes are here to stay. But moving forward, there is going to be a strong adaptability for these changes as we move into what is called our new normal. Yeah, we see how different businesses have reacted. One I've seen is the business response of Team A and Team B. Team A go into the office and Team B work remotely, and then you switch. You either switch weekly or every few days. Naturally, where there's a scope of adaptability there moving forward is where Team A becomes compromised to COVID-19 and have to work from home. Does that put the burden solely on Team B, where there needs to have a physical presence in an office space? Does that then further expose them to greater risk? These are questions that will need to be answered moving forward, and I think that only by experiencing this can we really see how that will work. It does depend a lot on business adaptability. If there is sort of a lackluster or a sort of a negative approach to moving online, then naturally businesses will suffer. So I suppose it is the question of, are the businesses going to adapt because they want to, or are they going to adapt because they have to?
There's a couple of points that I think we can take away from what you've said. One point in particular that I'd like to look at a little bit more closely is supervision. What do all these changes mean for supervision? Is there a greater opportunity for error?
Yes and no, I would say. I'm someone that I have my work supervised as a trainee solicitor, so my work will always be checked, and that's a very common process in our field of work in the legal sector. You're right in saying that supervision can be compromised because you don't have that physical presence where I can sit down and speak to someone. But also, we are going through, in the last couple of years, an environmentally friendly shift towards digitalization. I know Watemans themselves are trying to go paper-light, or are going paper-light, and so these conversations are always always sort of follow to a natural conclusion of, right, well, send me your work and I'll review it digitally. So there is a very strong argument that there is less of a compromise on supervision than you would originally have thought.
Because it's a cultural shift, that mindset.
Yeah, absolutely, yeah.
Can I bring you in, get an aviation perspective on all of this?
Yeah, of course. I mean, it's quite difficult from an aviation perspective to see how the landscape's going to look. Whilst, of course, we've seen all the changes that have happened, aviation is kind of in its infancy with COVID to an extent, because obviously of the grounding that happened. That being said, of course, the question I think on everyone's lips at the moment is it goes around solvency. You know, it's a well-known fact that the aviation and travel industry is a very lean industry, and we've never seen anything like this before, and yet to know how that will pan out per se. When we talk about aviation, though, we're not just talking about commercial aviation, we're not just talking about airlines. This has a ripple effect across the board. So if you like to think, if an aircraft is grounded, or a fleet of aircraft are grounded, the ground handlers aren't needed anymore, refuelers aren't needed, baggage handlers, hoteliers, transfer bus operators, you know, the list is endless. So when we talk about this, this is a whole wider piece, although the particular focus in the press tends to be on obviously commercial aviation. Not to be all doom and gloom though, there's been a promising surge in bookings since some of the lockdown has been easing, and there's, you know, airlines have been coming back out to say that they are going to start operating. But of course, we can't hide from the fact that there will be a lot of people that are quite concerned or scared or reticent to travel, and particularly how it's going to look in the future is something I think people are keen to see. One of the interesting things I think specific to the aviation and travel sector is other businesses have adapted wherever possible. So I don't know how many people's local restaurants are now doing takeout, you know, bakeries doing afternoon teas, etc. They've adapted to keep the revenue stream, but in an industry like aviation, it's very difficult to do that. Particularly with social distancing. I don't know how many times we've all got on board an aircraft and thought the person next to us could do with moving up a little bit, or, you know, we're trying to get our bag off the conveyor belt and there's someone breathing over you looking for theirs. How does social distance work in that environment? It will be very interesting to see. Now, of course, the reality is this is having a very huge detrimental financial impact on the aviation and travel sector as a whole. Now, this is not unheard of in this sector. I think through the past years, we've seen a lot of issues to do with solvency. And particularly in the past, there's been similar aspects that people have spoken about. People are comparing this to, is it like SARS in 2003? Is it like the volcanic ash crisis in 2010? Similar, but neither was a global pandemic. This has affected everyone, and there's a massive impact because of that. A recent IATA report has published that in March 2020, there was a £252 billion drop in passenger revenue. SARS in 2003 was 7 billion. So it just gives you an idea of how different it is. Now, back in 2003 with SARS, the insurance market shifted somewhat and did do some premium reliefs to try and assist the industry. But at the moment, there's questions from insureds. Why is that not happening now? Is it going to happen, etc. I think the reality we're in at the moment is nobody knows the effect this is going to have on premiums, particularly in aviation. It's perhaps a bit too soon to answer those questions. But the stark reality is the insurance market requires a solvent aviation market. So there's got to be some kind of balance found. But moving forward, airlines, particularly commercial airlines, are going to be looking at profit margins. And one of the measures recently suggested was that every middle seat of an aircraft is isolated to assist with social distancing. And I think there was quite a vocal airline chief who didn't like that idea. But quite rightly, when you're already very lean, to lose 30 seats is on an average aircraft is huge, absolutely huge. So it will be interesting to see how things pan out, but I think it's going to have a massive impact on the landscape moving forward.
And who pays for that as well? I mean, does it come back to the consumer?
That's a good argument.
Yeah, moving on. Are there any businesses or sectors which are likely to come under the microscope in terms of their responsiveness to this pandemic? Or put another way, are there any businesses which are likely to be transformed for good? Christy, can I come to you first?
Yeah, sure, of course. Yes, looking at in terms of insurance and insurers, parts of their businesses that are under the microscope. In particular, making lots of headlines is business interruption insurance. You must have been living under a rock if you're not aware that this is a big issue for insurers at the moment. So much so that the FCA is having a test case. So we'll watch that keenly to see how that pans out. And another thing that we were expecting is there's a potential tsunami of D&O claims. And this has received much press interest. For those of the attendees that might not be familiar, D&O, directors and officers policies, they provide indemnity for companies and directors, senior managers, for claims that arise out of the decisions made by the management in relation to the companies. I must add that there's generally no cover for business interruption under D&O policies. When you consider the type of risks covered, it's not surprising that many consider there'll be a spike in D&O claims, and these are going to focus on mismanagement of the companies. And things like this are often revealed in terms of economic uncertainty. Looking back to the last huge recession in 2008, in the year following the crash, one of the leading brokers reported that there was a 75% increase in the number of D&O notifications. This number went on to increase rapidly and peaked in 2012. And just to give you an idea of those numbers, in March 2007, they were looking in the region of 300 notifications a year. By 2012, that was up to 1,700 claims a year. So the number increased fourfold. These types of claims are likely to be brought by employees and shareholders, and they're inevitably going to focus on issues surrounding the lack of preparation by the directors, poor contingency planning, and just general mismanagement that has been revealed when the companies are facing hard times. We've not had any D&O cases that have hit the headlines in the UK yet, but fortunately we can look to our US counterparts who generally litigate a bit faster than us. And we've got some very interesting case studies there. There's class action against Norwegian Cruise Line Holdings, and it's alleged that Norwegian Cruise Line misled customers and investors when they made statements about COVID-19. And it's quite interesting to look back to what people were saying at the start of the crisis. And in particular, this cruise line was saying to people, oh, it won't be an issue because our cruises operate in warm climates and COVID-19 can't survive in warm climates. There was also one great statement, which is coronavirus in humans is an overhyped pandemic scare. So it'd be interesting to see how the claim pans out. But it was thought that these statements were made because they wanted passengers to continue to book cruises. They wanted those that had booked to not cancel. But the effect was that it inflated the price, and so now investors are keen to get some money back and say that this was mismanagement of false statements. Touching on cruise lines, this is there've been lots of stories about cruise ships during the pandemic. One of the most famous is the Diamond Princess cruise ship. On the 3rd of February, it was off the coast of Japan and reported an outbreak of COVID-19. There were nearly 4,000 people on board the ship, 700 of which tested positive for COVID-19, and very sadly, 9 people died. So it's perhaps not surprising that people are predicting that the cruise industry is going to take a while to recover from this, and that's particularly when you look at the demographic of passengers who, the the stereotype is that they're all sort of older people who've retired, and also when you look at the global nature of the pandemic, it's probably going to take years for the cruise industry to recover, if it recovers at all. Also looking at another US example, which I found particularly surprising, is there's a class action against Zoom. And prior to the pandemic, I'd never even heard of Zoom, and now I use it several times a day. So I would have thought that this would be one of the success stories of the pandemic, but apparently not. There were some alleged concealment issues, and that Zoom concealed the fact that the encryption of its services wasn't great. And once this came to light, the share price plummeted, and now shareholders are bringing a class action against Zoom. So it's going to be very interesting to see how all of this pans out and to see what similar cases arise in the UK. Only time will tell if businesses have responded effectively to the crisis.
Hayley, can I bring you in on this aviation perspective?
Yeah, absolutely. I mean, I think aviation is always under a microscope. I don't think it ever hasn't been, but this has maybe refocused it somewhat. One of the biggest things that I think is under scrutiny at the moment is obviously the quarantine rules. There's been much debate on the impact this will have on the travel industry. And I understand the concern completely, whilst no one is taken away from the fact that, airlines, tour operators, all travel industry want everything to be safe. To put in place quarantine measures will, undoubtedly have a detrimental effect on people visiting the UK. And that in itself creates its own issues. One of the other areas that the industry has faced some backlash on throughout COVID-19 is its handling of cancellations and refunding consumers. There was a lot of call at the start to allow people just to refund in a travel voucher rather than cash, because of course the whole industry saying we've had this massive revenue drop and now we're also having to give money back. How do we sustain this? Something that's quite interesting is refunds for cancellations and compensation in light of anything like this is uninsured. There are some products out there that potentially would insure it, but it's not commonplace in the market. Perhaps something that will change. But I also foresee that there might be a potential for historical claims to come to fruition. Of course, we all know when people hit hard times and when consumers hit hard times, everyone will be looking for ways to recoup as much money as possible. So someone who potentially suffered an injury last year on board an aircraft at the time may have thought, it's just one of those things. They may well now think it's not one of those things. I actually am going to pursue this as a claim. Equally, I wonder how the public's perception of travel will change. Will they expect people to offer them a higher duty of care? It's a well-known thing, perhaps, for us that have been in the aviation industry for a long time, is that a lot of passengers generally do get on board an aircraft and then expect the crew to basically look after them completely. Is that going to get even worse? How far do we take passenger safety? How far do they respect our safety, cabin crew safety, etc.? But one of the biggest points I think will change is travel insurance. I think it's a well-known fact that a lot of people don't purchase travel insurance. They perhaps rely on their credit card, or back in the day when I was a travel agent, people say don't need it, I've got my E111 card. So there's a lot of shift in cultural purchases. Christy touched on it earlier. She's already looked at making more purchases on a credit card for more protection. So whilst people are traveling, are they going to now be looking to actually travel with travel insurance? Will it actually cover them for what they need, etc.? So I think that's going to be a really interesting developing area. And one of the other areas that I think is going to be of key interest, and particularly in the aviation and tour operator section, is going to be public liability cover. At the moment, tour operators have public liability insurance. One of the key factors for tour operators that's different to a lot of other sectors is through the regulations of the Package Travel Directive that they fall under, they're liable for their supply chain. So to a consumer, if a consumer, for instance, slips as a result of an issue at the hotel in Benidorm, the tour operator picks up the liability. Of course, there's recovery aspects afterwards. Now, public liability insurance, obviously, there is cover in place for that. But how far does this extend? Will there now be claims emerging for COVID? You know, the hotel didn't protect me well enough, or, you know, the tour bus wasn't set up properly. And equally, when we deal with claims of that nature in an aviation and tour operator respect, from a legal perspective, the standard of health and safety care is based on what's local standards. Have there been any local standards established regarding COVID-19 and how other countries and jurisdictions are managing social distancing? No, I don't think there has been. So this is going to be a really emerging area, and I think it will have a massive change. And I think the change will probably have a wider impact down the line.
So, Tim, you've talked about how certain businesses and professions have adapted to all of this and changed the way that they operate. And if we think that some of those changes are here to stay, are there any certain types of professional services or business models that will become redundant?
I think that is definitely a possibility. There is almost an eventuality with a change of outlook in terms of business that some models may become redundant. I mean, if we look at, I don't know, for example, we look at gig workers or we look at freelancers, these are incredibly adaptable business models. I know in 2018 we had roughly 1,000 solicitors who were working remotely at platform law firms. So that was producing a very refreshing twist on quite a classic, if you like, sector, the legal sector. But obviously, with the caveat with that is that there were huge issues for a lot of solicitors in terms of getting relevant insurance cover, and that sort of hamstrung them. And I guess time will tell, as has been touched upon by both Christy and Hayley, that how the gig economy will move forward on this. Will this present opportunities, you know, where we see some services, gig workers have just shut down with lockdown, as they had to, looking at taxi drivers, looking at, you know, babysitters, looking at cleaners. In these areas became quite immediately not needed, but that doesn't obviously mean that they won't become needed after lockdown eases and when we enter that new normal, as we talk about. And you know, in a hope not to keep it all sort of doom and gloom, there is obviously a huge demand, and where the sector can grow in logistics, in delivery services, and adaptability again comes into it very strongly, where, you know, we now see taxi drivers that have to wear face coverings, and their fares, the people that get into their taxi will have to wear face coverings as well. So there wasn't an immediate chance for these areas to adapt, but given the opportunity, they are very good at adapting, and that will definitely persist moving forward.
Christy, from an insurance perspective, anything that you can add to this discussion?
Well, what I did want to touch upon, we have been talking about business and how that's going to respond, and particularly insurers. But one of the things that we haven't touched on yet, that we are going to have to work alongside government, and obviously the government has been very good at the measures it's put in place in terms of the furlough scheme and other measures it's taken to help businesses. And something that came to light recently is that one big area of insurance is trade credit insurance, and that is obviously going to be receiving a hell of a lot of claims. For those of you that don't know, trade credit insurance provides cover for businesses. And so if customers don't pay their debts, or if they're late on paying their debts, businesses that have this insurance can make a claim under their policy. Obviously, there's going to be a lot of defaulting customers and businesses. So the ABI and its members submitted a proposal to the government asking for there to be put in place a government-backed scheme. And on the 4th of June, the government confirmed that it would back a £10 billion trade credit reinsurance scheme. And under this scheme, the government will be taking 90% of the trade credit premiums and dealing with handling 90% of the claims, whilst the trade credit insurers will just retain 10%. And this means, great news for the trade credit insurers. They're not going to go out of business, but also they can continue to offer trade credit insurance to insureds, and it's going to help to maintain levels of cover that without this government scheme wouldn't be possible. The current scheme's going to extend until the end of the year, but it's going to be under review in September with a view to potentially extending it. So that's just from one type of insurance, but it'd be interesting to see if there are other government interventions to help support businesses such as this.
Well, it's funny you say it, actually, because whilst not directly related to COVID, just touching on some of the things that Tim's been talking about, the government intervened quite recently and set out a number of guidelines for gig workers and freelancers, and certain things that businesses had to do, certain protections that would be afforded to that category of workforce. It's received a lot of criticism, and the suggestion is it doesn't quite go far enough. But the point is that it is such an evolving landscape that there can be new risks that come about by using those models. So what is really important, I think, for insurers to understand is that as we shift and as this becomes the new norm to use these models to rely on our gig workers to kind of fill a gap temporarily, that potentially there are new liabilities there, which may or may not fall under existing covers. So just something to bear in mind, particularly if these changes are here to stay. Moving on slightly then, talking about risk, what do we think all of this means from a risk perspective? Tim, I'm going to come to you first.
From a risk perspective, I've talked quite heavily about businesses moving online, people working remotely, people working from home. I can see two very clear risks with that. Firstly, the reliance on domestic internet usage. Businesses, by and large, do spend a lot of money on their internet packages in their offices. This is something that is no longer being utilised whilst everyone works from home, and domestic internet speeds are not as reliable as these other connections. Do we see a change moving towards appreciating that? BT a couple of weeks ago launched a new service which will allow consumers to open a second broadband connection for their homes. So does that mean that this risk is being acknowledged? Quite possibly, but that there are more important or more relevant factors that need to be considered. We as a country have varying infrastructure. We have, in some areas, we have fibre optic connections, and in some areas we still use the traditional copper. Does this mean that where we have a more geographically diverse workforce, that can be to the detriment of businesses and cause losses where there is faulty internet? And alongside that, there isn't a clear link there between a domestic internet provider, the worker, and the employer. So that there is a risk there of loss. We all have experienced internet connections in one form or another. A YouGov poll in May found that a third of UK adults have experienced worse internet connection during lockdown, myself included. I've had a day where my internet was so bad that I couldn't work, and that is a real risk facing businesses. Secondly, one of the big point out risks is confidentiality, with, again, a more geographically diverse workforce, with people working from home. You risk a loss of, or a greater risk of a loss of confidential information where things aren't traditionally in an office, that it's locked at night. People's living situations definitely play a part in that. Not everyone has their own office space, or people that live in a house share. So there are two risks there that really do stand out.
And with risks, though, there's new opportunities. What do you think?
Absolutely. There is definitely new opportunities in terms of coverage. You can see new policy ideas, opportunities to rebuild policy offerings. Conversely, there is a lot of risk involved for insurers due to a possible spike in tech-related E&O claims. But you turn that on its head, there is a chance to introduce working from home coverage, covering for loss of IT, for confidentiality breaches, as said, but also there is an opportunity to reaffirm the duty of care owed by employers, and how policy relates to that. With mental health, with physical health, we have recently, I believe, as a business culture, entered a stage where we take these things very seriously. When you're in your office, you have your chair at a certain height, you have your screen at a certain height in proportion to your eyes, and these are very, very important considerations. Now, with the huge adaptability, or the huge adaptation, I should say, of businesses to working from home, there is now a time to reflect on if these important measures are still being considered, and how insurance policy can cover that. Working conditions at home, regular breaks, working hours, setup of your workstation, and how that links to employer liability.
So potentially we could see a greater uptake in demand or buying of MPL policies, potentially greater uptake in cyber policies, maybe, when previously, although we talk a lot about cyber, they've really accounted for quite a small proportion of the SME market, for example.
Definitely, and I think it's definitely a hot topic of conversation, cyber, but it's one that's so relevant, as you can evidence from how we're delivering this webinar today.
Hayley, I'm going to bring you in on this.
Mm-hmm.
Emerging risks.
Yeah,
Or
I mean, I think
maybe an evolution in claims. What do you think?
Oh, I like that. Very good. Yeah, I mean, it's very interesting. We've touched on quite various different types of claims. Just going on from what Tim was saying there, cyber is something, obviously, that we do, as you say, Amy, talk about it a lot. Particularly in the travel and aviation industry, cyber it's not new. Information's been exchanged for years, but I think it's not something that perhaps has been at the forefront of everyone's mind. Regrettably, due to some topical things that have happened recently and some data breaches, it probably is more in people's mind now than ever. So I do think we may now perhaps see a shift towards more uptake and more purchase of cyber insurance within the market. The other area that for me is quite intriguing will be passenger liability claims. In terms of moving forward, are we going to see new types of claims emerge that relate to COVID, contraction of COVID? This in itself brings a wider can of worms into play, because obviously you've got jurisdictional issues, you've got lots of other passenger involvement, cabin crew, etc. Not only that, I've already touched on it before, but public liability claims are going to emerge, and they're going to morph, I think, somewhat into how they're going to be handled and what they'll look like in the future. One of the areas that I did touch on before is the uninsured loss aspect of certainly a commercial airline. There's probably a lot of people have heard of EC EU 261, delay, cancellation, compensation. It's been around a fair while now, but it's still there. And for the majority of airlines, it's uninsured. So that is just money that's coming out the back pocket all the time. Now, is there now an opportunity, because with the threat, and obviously we don't know what's going to happen, but if there is a second wave, etc., is there a possibility that there's going to be a lot more cancellations, operational changes? People are starting to book again. Will their flight be cancelled? Now, whilst no one can say what the case law will end up looking like in terms of compensation, that is a whole nother webinar. What we must look at is actually, you know, is there now a niche market for insurance to cover that aspect? I do know of a couple of people in the market that have looked into that product before, back from when I was in-house, but certainly it's not something that's been explored widely. So I think that may have an impact. And again, touching on what Tim said in terms of employer liability, you know, a lot of claims from an airline perspective come from cabin crew, and that's, you know, just to do with the nature of the job that they do, etc. But I question where the duty of care extends, PPE, etc. Are we going to see a spike in employment claims? But where do you draw the line with that?
Hayley, the thought that occurs to me when you're mentioning cabin crew. So a BA air hostess reports that she's contracted COVID-19. Well, where do you trace that to? You know, she could be traveling all over the world. And also, you know, as we've seen recently, New Zealand had eliminated COVID-19. Two British tourists took it back into the country. So, you know, it seems, like you say, it's a topic for another webinar, but you know, the potential risks here are, you know, far-reaching and, you know, just, you know, mind-blowing, really.
It's certainly going to make investigation from an insurance perspective quite tough, shall we say?
Yeah, well, and it's not, again, it's not going to be a business response, is it? I mean, this is something that governments are going to have to grapple with and try and reach some sort of agreement between themselves on, you know, a global solution.
Absolutely.
So, Christy, then turning to you, anything that you can think of in terms of emerging risks?
Well, Tim's already touched on the emerging risks for cyber and employment. Looking back from D&O perspective, these are going to be key considerations for directors and officers and their insurers, and they're going to want to make sure that they've taken the appropriate action to safeguard businesses, and businesses, I mean, including the employees and the IT infrastructure. With this in mind, underwriters are probably going to be asking questions about the business impact of COVID, and they'll be keen to know whether businesses have got guidance, and if they've planned, you know, their contingency planning for COVID-19, and particularly what preparations they made for the impact of COVID-19 on the financial performance of the company, because a company in financial difficulty, then more likely to be claims arising against them. Underwriters are probably going to want to know what additional disclosure is being planned in relation to the ongoing pandemic. They want to know about medium-term operational impacts of the pandemic, and they want to know what actions the businesses have taken to ensure the safety of employees. So that's just you know, tying it back to that. But in terms of other emerging risks, not a new risk, but a risk that rears its ugly head after every crisis, is fraudulent claims. After the 2008 crash, there was a staggering increase in the number of fraudulent claims. It was reported that the year following the crisis, there were 100,000 fraudulent claims, and we need to bear in mind that's just the number that were found out. There were potentially a lot more, and the value of those fraudulent claims was £730 million, which is a lot of pressure on the insurance industry that's already dealing with an unprecedented number of claims. And also worth reminding ourselves that the last recession was pre-Insurance Act, so the position in terms of fraudulent claims has changed somewhat. Prior to the Insurance Act, which came into force in 2016, insurers really had one remedy, which was if there was a fraudulent claim, policy was avoided, and any money that they paid out was potentially reclaimed, and premiums were withheld. But the Act has brought in more proportionate remedies. So, for example, if it's a genuine claim, but it's been exaggerated somewhat, the insurers can use a proportionate remedy rather than quite a draconian remedy of voiding the entire policy. So it'll be interesting to see where this goes. And I'm sorry I keep repeating myself, but it is all very interesting, and there are going to be a lot of developments, and it's interesting times. But I could see a potential coverage argument if an insurer avoids a policy of and then the insured struggles to get cover elsewhere in an already hard market, for them to potentially bring a claim either in the courts or to the ombudsman stating, well, the remedy wasn't proportionate and the insurer shouldn't have taken that step. So yeah, one to watch.
So Hayley, I'm just going to pick up on something that you talked about earlier. You mentioned sort of history and maybe lessons to be learned from that, but you also talked about how those events that you mentioned, SARS in 2003, the volcanic ash in 2010, it's not quite the same as what we're facing now. But nonetheless, is there not an argument that insurers can use that history and sort of learn from that and use it to kind of shape and model future products and the like?
Yeah, definitely. I think it's really important that the past is looked at and we take from that what we can. Like I said before, though, I do stress the point that both SARS and volcanic ash are so fundamentally different in many aspects. If we look at SARS, for instance, I mentioned earlier, a £7 billion loss. SARS was isolated sort of towards America Pacific, not Europe. So it didn't have this global effect that we're currently seeing. Volcanic ash in 2010, similar. There was lots of grounding of aircraft, but for such a small space of time compared to what we've seen, and again was isolated to one certain area. So whilst the people involved in those crises and those locations suffered, there was the rest of the aviation industry was carrying on, if you like. So the impact on insurance was not the same, I don't think. That being said, I think we have to look at the positives of this as well. And I think that COVID-19 actually, if we take what's happened in history with SARS, with volcanic ash, there are new opportunities I think that will be created, and there will be, whilst at the minute it's having this massive detrimental effect on the industry, I think it will provide insurers with new opportunities for insurance that simply weren't necessary before, but are now due to COVID.
Do you think that the industry will recover more quickly than it did back in 2003 and back in 2010? I appreciate that we're not really comparing apples with apples, but yeah, things have moved on quite a lot.
I think there's a harsh reality at the moment that the industry has furloughed, as with other industries, have taken advantage of the furlough. People have already been made redundant, cabin crew, pilots, etc. Because what we have to think about, not so similar to any other sector, and not to be silly about it, but a pilot can't work from home, let's face it, cabin crew can't work from home. So the reality there is that whilst I think there's this keen push to recover as quickly as possible, the factors involved are, one, passenger uptake. We don't know how that's going to be because people are still quite concerned, naturally, coupled with resource. You can't just go back into operation as it was before when you've furloughed your work staff or laid people off. So I imagine it will recover very well because it always seems to bounce back, aviation and travel, but I think it's probably going to take a bit longer just because the sheer volume of this and the nature of it and the global nature.
Christy, coming to you, you talked earlier about D&O cover and touched ever so slightly on whether or not such policies might respond to COVID-19 related losses. Is there anything else that you can tell us about that?
Yes, sure. Well, as I said, there isn't any cover under D&O policies for business interruption claims. it's also unlikely that the specific risks associated with COVID-19 will there be express provision for that in D&O policies. But most policies respond well to traditional D&O perils, and even if those are triggered by COVID-19 events, it's likely that there will be cover. And this is what some people in the market have been referring to as silent COVID-19 coverage, because it would be coverage that doesn't expressly address pandemic perils, but may in any event respond to them. Most D&O policies exclude covers for bodily injury and property damages, but this coverage is normally quite narrowly drafted, so that a claim arising from or relating to bodily injury may still attract some cover under the policy. And particularly exclusions will not often apply to claims for emotional distress or mental anguish. So it's obviously going to be taken on a wording by wording basis to determine whether the D&O director or officer making management decisions may have cover in relation to COVID related claims.
What about decisions made by the controlling mind as regards furlough and whether or not to make use of that? I mean, is that the sort of thing that might be covered if a bad decision's been made in that regard?
Potentially, yes. I mean, it would be quite unusual for a director and officer to just decide not to make use of the furlough scheme, and actually in the press recently, it's been that quite a lot of people have been making fraudulent claims under the furlough scheme, although that in itself might attract a claim against directors and officers for mismanagement if they have been making fraudulent claims. But one thing that's really important to bear in mind is that the losses arising from this pandemic are going to be long tail losses, and they may impact on more than one policy year. And whilst insurers are adapting and introducing new exclusions to ensure that COVID-19 claims aren't covered, it may be that there's cover under one policy year, but not under the following policy year. So it's, yeah, I'm not going to say it's interesting because I've said that enough, but yeah, it is.
And
there are
obviously
issues that are going to arise.
There's the added complication, of course, that when you're talking about multiple policies potentially being engaged, when they're written on a different basis.
Yes.
Your claims made or your events based.
Exactly.
A whole new webinar, I think, but
a whole new webinar.
Okay, well, I'm just looking and I can't see that we've had any additional questions from our audience. Maybe I'll leave it just a minute just to see if any come in. No questions. Okay, well, thank you very much for listening today. I hope you found it enjoyable, and watch this space for further webinars.